Now, the bond market in Nigeria saw modest demand today, with yields dipping marginally. Meanwhile, the Naira closed the days slightly weaker despite dollar supply from oil companies. Joining me now to give us some thoughts on the fixed income and currency markets is Adebayo Omogoroye. He's head of dealing at Guaranty Trust Bank. Thank you so much, Bayo, for joining us.
Hi, thank you, Wale.
All right, so maybe we should start with the Naira. I think that has been the very interesting area these days. We saw it weakened slightly today to about 161.50. Your thoughts about the trend we're seeing in the Naira in particular, because it's certainly something that is very important to foreign investors looking to invest in the fixed income market. And it's interesting that the activity in the fixed income market, particularly foreign investor activity, impacts on the Naira, on the currency, which drives that investment itself. So just talk us through your thoughts about the dynamics we're seeing with the Naira right now.
All right, yeah, thank you. With the Naira, we see Naira stabilize around the 161 levels of recent. It's a far cry from the 158 to 159 levels we saw earlier in the month or the month before. Right. Now, at these levels, we've seen CBN try to come to the market to try and calm the markets at times of volatility. Yeah. But in spite of all the efforts they made, Naira stabilized around this level. Yeah. I want to suggest that to a large extent, we're beginning to assume that this is probably where we're going to stabilize until we find any significant shocks coming to the market to either move us higher or lower.
Right. Okay, yes. Go ahead. I get that sense as well. I get the sense that 161, 161.50 is perhaps a new normal for the Naira, even though we've seen the central bank intervene. And of course, they can intervene further to bring it lower. But I get the sense that they are comfortable with where it is, particularly in the bank market right now. But what will be key, of course, is what happens with respect to inflows from foreign investors buying our bonds. And given where yields are right now, do you get the sense that we're going to see a lot more inflows into the Nigerian market for fixed income investments?
Well, I think to a large extent, most of the foreign investments going to come is a function of how they value the risk. Right. Most people went out of the markets following the fact that they believe the era of cheap funding is almost over. Yeah. So people reacted by closing out the positions that they created. Now, do we think that has changed? If there's no change to that view in the market, I'm not sure we're going to see any significant flows. Yeah. There are the investors, the real money investors, who either benchmark the index that Nigeria is already listed on currently. Those might continue to come as there are changes to the index or as they begin to reallocate their portfolios or rebalance their portfolios. Right. But the kind of influx that we had initially, it's unlikely we'll see that again till there's any significant shocks to the global economy or to the way things are flowing.
Let's move on to the bonds and T-bills. Of course, we are expecting an auction this month. What are your broad expectations in terms of where yields may be at and the level of participation? I think during the last auction was pretty interesting, the dynamics we saw there in terms of the demand and the levels levels at which investors were willing to buy. Since then, we've seen very little activity in the OMO market because people are asking for higher yields. So what are your broad expectations for that next auction?
Well, for the next auction, I think a lot will depend on how people evaluate risk now. The last auction, there was not so much sales because the view was that the rates at which investors wanted to buy those securities were just too high for the government. Now, the government has issued 1 billion in the Eurobond market. Right. They've reduced their takeoff from the local market, so we're seeing 55 billion on offer next week. Sorry. So that also gives an indication. If there's a lot of demand coming from the market, you have a limited supply. So that will affect how people price the issues. Right. Then secondly, for most of the securities that we have, the major investors in the market are the PFAs, are the asset managers. And those of them actually prefer to hold some of the securities because of the duration that they need to gain out of it. Right. Now, if those ones come heavily into the market, you might see a yield compression or see rates yields around the levels where you have them in the market today. Right. There's not so much.
What impact do you think sorry to cut in there, but I want to get your thoughts on this. What impact do you think the upcoming MPC would have on investor activity? I think the broad view is that they are probably going to keep things unchanged at this point, but how do you see things playing out?
I think it would be interesting to see how that plays out. We've always believed that the CBN continues to manage FX risk. Right. But now we've seen some stability, even though the levels are higher than what we had before, but a stable market nonetheless. Now, whatever they do there to either address that or to watch the market would really play out into how the market reacts to everything that we see. Yields are currently really picked up a little bit from where we had previously, But if you can see from what you also said about the OMO, they're not selling so much because CBN is not willing to mop up liquidity at any cost.
Yeah.
They're willing to take it off from the market to maintain equilibrium, but they're not willing to pay any price.
Right.
And that also plays into how whatever it is that decisions they make up at the MPC.
Right. Okay, if we move back to the currency discussion, of course the sales from oil majors has been key as well in the past, but then we've seen the compression in oil production in Nigeria this year in particular, given the oil theft and issues we have there. The good news though is that the oil price has held up pretty well over the last few weeks, well over $100 per barrel. And a lot of people are now suggesting that that is perhaps the new benchmark, $100. If it were to fall below $100, we could see some panic buying of dollars, and that, of course, will put some pressure on the Naira. So your thoughts about that $100 figure being significant in measuring the appetite of investors who are looking to buy the dollars?
Well, I think at $100, everybody's comfortable, like you said. Oil prices are currently around about 108 for Brent currently. And for a lot of people, with the amount of reserves that CBN holds currently, there's an amount of comfort in the economy. There's an amount of comfort in the fact that the Naira should be able to hold for the time being. Now, if the oil prices start falling below $100 and production doesn't ramp up, then you begin to see some panic in the market.
Right.
Now, if that panic comes in and CBN shows some capacity to hold that panic, to calm the market, then we might see a return to like what we're seeing currently, some uneasy quiet, so to say, if I may call it that. But in the absence of any significant moves by the CBN to try and calm the markets, if there are any panic, if any panic does ensue, then we would really see an escalation of that panic impact. A lot will depend on what CBN actually does when the panic does arise in the market.